A very warm welcome to everyone. What an excellent turnout. It's fantastic to see so many professionals are interested to learn about tokenized energy settlements and how to leverage these market developments. To give you a flavor of the momentum around this conversation, we've had roughly 70 municipalities represented alongside DFIs, NPOs, research institutes, and private sector players, which is a strong signal of how committed South Africa is to leapfrog energy market barriers and deliver affordable, reliable, clean energy for customers and communities. Today, our speakers are going to explore and share insights and practical approaches that help municipalities to unlock access to more inexpensive green electricity. Now, Tokenized Energy Settlements, or TES model, is designed to include all customer types, which includes prepaid and low voltage customers. During this session, expect our experts to share context around how the TES model reduces implementation complexity by avoiding new tariffs and new use of system agreements, complex contractual structures or MFMA procurement hurdles, the need for trading licenses, as well as major billing system upgrades. And if that wasn't compelling enough, the model also safeguards existing municipal margins and revenue, cost of supply structures, and customer ownership. So, my name is Lindy Taylor. I'm the founder and CEO of Fifth Discipline, consultancy geared towards enabling climate change players to scale through the lens of people, brand, and systems. And I'll be moderating today's session. There's been a slight change to the speakers, but nevertheless, we have a stellar lineup of experts who will be presenting, including GreenCape's Johan Strydom, ICLEI Africa's Michael Boulle, Krutham's Michael Cordeur, and Meridian Economics' Frank Spencer. Frank will be presenting last on Tokenized Energy Settlement, affordable green electricity for municipal customers with revenue protection. So thank you to all our speakers for being here today. I would also like to extend a big thank you to Future Cities Africa and Meridian Economics for co-organizing this webinar today to equip municipalities with practical revenue-safe pathways to deliver affordable green electricity to all customer segments through tokenized energy settlement. Future Cities Africa is a thought leadership and knowledge exchange platform advancing sustainable urban development, and Meridian Economics is a leading South African energy economics consultancy specializing in energy policy, regulation, and just transition market solutions. So a quick one before we dive into the session. There will be a Q&A after each of the speakers' presentations. And a poll towards the end of the session, which will allow attendees to indicate their interest to learn more about TES or participate in follow-up discussions. And if we have time, we might have a group Q&A at the end. So our first speaker today is Johan Strydom, who will be presenting on municipal business models, how to stay ahead of the change. Johan is a technical lead for GreenCape's energy team. He brings deep expertise across demand-side management, small-scale embedded generation, wheeling, and smart grid engineering with a clear focus on supporting municipalities. Johan has also contributed to the National Energy Crisis Committee, NEOCOM workstreams, wheeling, and he works closely with local and national government to remove barriers and unlock green economic growth. So without further ado, let's hand over to you, Johan.
Thanks, Lindy. I'm going to share my screen for my presentation. There we go. And thanks for the opportunity. Like Lindy mentioned, I'm speaking about municipal business models and how to stay ahead of the change, because I think it's quite a dynamic environment municipalities are finding themselves in, and a lot of changes in the market happening and needs from customers emerging. And it's quite important for municipalities to think through that and how can they create that enabling environment for their customers. Maybe just a quick snapshot of GreenCape. So we're a non-profit organization driving the widespread adoption of economic viable green economy solutions. And we've been in the industry for over 10 years, and apart from energy, we also have circular economy, sustainable agriculture, sustainable transport, green finance, circular economy, and water. And our main thing is to drive jobs and investments into the green economy and removing barriers for them. So that work takes us quite a lot, working with municipalities across the country to support them with the various greening initiatives that they can and create that green economy within their local spaces. So what I'm going to talk about today is sort of the key challenges facing the EDI, so the electrical distribution industry, under which municipalities do fall. So to talk about some no regret actions for municipalities, then go a bit into what is wheeling and what is the revenue impact of wheeling, and then what NERSA is saying around the concept of wheeling, and then some of the challenges municipalities face with implementations of wheeling, and then what municipalities need going forward. Hopefully that'll give sort of a broad frame of how municipalities can adapt to create these enabling environments for green economic growth. So the key challenges facing the distribution industry is customer behavior. So there's a growing adoption of solar, rooftop solar, and energy efficiency, reducing that grid reliance. And customers are changing the way that they purchase electricity, which reduces the amount of sales that customers are doing. So with the market reforms as well, we're seeing new regulatory changes and things like wheeling and the wholesale electricity market is creating quite a lot of uncertainties for municipalities and how to structure themselves going forward. Eskom's unbundling is also creating some revisions to how bulk supply pricing and municipal tariffs would look like in the future. That there's quite a lot of stress on the municipal balance sheet. And we also have that load shedding legacy. So while supply has stabilized, I think most of the municipalities face quite a lot of erosion of industrial bases and a decrease in sales due to increased solar, rooftop solar, and then sort of high equipment repair costs. So there's still sort of that backlog of repairing what was damaged during the load shedding era. That was quite a disruptive period in the market. So just to also then look at some of the numbers. So this is some data that was pulled from National Treasury's website. In 2010, there was a municipal surplus. So municipal surplus is essentially the money a municipality has left over to fund their electricity business and cross-subsidize and create cross-subsidize to other services and also to other customer bases. It's essentially the municipality's income that they can use to operate their business. In 2010 was more than 20 billion, and it was an operating revenue. So the operating surplus as a percentage of the electricity revenues was in the positive. So that was 15%, more than 15%. But now, sort of in 2022, 2023, that surplus has shrunk to below zero. And we're also seeing that the majority, there's a lot of municipalities that run at a loss. So this is the national average, so taking the average across all municipalities. So there's obviously some municipalities who still do operate with in the positive space, but a lot of them are struggling to have enough money to run their business. And that was mentioned by highlighted by the actions I mentioned previously, that is sort of making it hard for municipalities to operate with things like load shedding and the market changes and customers defecting from the grid. So some no regret actions for municipalities to prepare for the transition. So I think it's quite important is that they need to anticipate what the customers' needs are. So enable customers to meet their energy needs. So if customers want to transition to low carbon electricity and cheaper electricity from other sources, creating that enabling environment and doing it with them is essentially one of the key mechanisms to ensure that the municipality's grid stays relevant within that. I think what happened with a lot of municipalities across the country is that they don't necessarily have that embedded generation frameworks and things like that. And without that, customers are installing rooftop solar on their roofs without that sort of partnership with bylaw and a requirements document from the municipality, and there's a lot of revenue that goes locked in that. But if a municipality work with the minister, with the customers, they could essentially create those frameworks in a way that is beneficial for both parties. And balancing the books, so make sure that whatever implementation there is from the municipality side is to recover the actual cost to stay viable. And I mentioned the enabling environment quite a bit, but with that comes maintaining compliance with that, and while also then enabling innovation. So that's quite important. And then that future-proofing of the grid. So things like smart metering and integration of renewable energy in the grids, and allowing the customers to use those prosumer use cases is quite important. So what I'm saying is that private generation could be a key enabler for municipalities. So I think we often hear that IPPs and traders and so forth wants to cherry pick from municipal customers, but I think the alternative is also true, where the private generation is actually one of those enablers that can help municipalities. Firstly, anticipating the customer's needs, that need that they have for green and cheap electricity, and for a municipality enabling private generation within their areas. The municipality essentially that has no capital cost for that infrastructure. It also transfers the risk of power purchases to willing customers. So with the wheeling frameworks and so forth, and then also it ensures that municipalities remain surplus neutral throughout this. So they don't have to take the risk of buying necessary electricity or preventing customers from purchasing electricity, and then they do it in a way that is not endorsed by the municipality. It would essentially help municipalities with remaining relevant within the changing market. Enabling customers to purchase power from independent power producers through wheeling or another mechanism will protect municipal revenue in the long term, where behind the meter solutions like rooftop PV would erode revenue if it's not designed in a way that would support sort of that fixed charges. So I'm speaking a bit about wheeling. So third-party wheeling enables the transport of privately generated electricity to a customer via the existing ESCOM or municipal grid, and it enables the sale of electricity through the network. And when correctly executed, ensures that all parties are fairly compensated. So when I mentioned private generation, I think it's quite important that through something like wheeling, that if a municipality enables that they would remain whole through that transaction. Their surplus would still be what it was before. It doesn't deal with the physical flow of energy, but it's a financial accounting of energy that is brought by a customer through a bilateral contact. So there's two types of wheeling that are quite common. It's where the IPP or the power producer is connected to ESCOM and then wheels it through the ESCOM network through the municipal network to the off-taker in principle, but it's actually the financial settlements that's quite important. Or the power producer can be connected within the municipality. So conceptually, if we think about it, municipalities are already wheeling energy to municipal ESCOM energy to municipal customers. So if there's no power producer there, ESCOM municipality is transporting that electricity from ESCOM to municipal off-takers. So they're passing that electricity on behalf of ESCOM, and then also collecting the revenue on behalf of ESCOM, and then passing the ESCOM share back to them. So essentially selling ESCOM's electricity on behalf of them. What changes with wheeling is that the municipality only collects the surplus, but not the energy cost. That energy cost is settled between the off-taker and the power producer. So maybe to talk a little bit on municipal revenue impact, because I think that's quite important when we do look at models like wheeling. And I've mentioned previously, if it's done correctly, the municipality surplus remains the same. So surplus in this context, because I think there's also a challenge with quite a lot of ways people are using some of these terms, but for the purposes of this talk, I'm sort of saying in terms of surplus components is grid services, so the maintenance and operation of the electrical network, so that would be salaries, that would be infrastructure costs and so forth, administration fees, so that's also for billing and customer services, cross subsidies, so financial support to other municipal service or other tariff categories, technical losses, the cost of energy lost during transmission and distribution, and then sort of general reliability, stability for power supply and other costs, any other costs to operate the grid. And that would be the municipal surplus. So if you look at the picture we have here, there's the energy that is purchased from Eskom, and then there's the user system charges, which in this context is the municipal surplus. So with the important thing for municipalities is to make sure that they, irrespective of the model they use to enable private generation, is that they still get this the surplus that they need to get. So that's quite important for municipalities. I think that's the main reason why I showed this picture and explained the sort of surplus components, is that to remain whole in municipality financially, they need to still recover this cost. And then, yeah, this was borrowed from sseg.org.za's information, but there's quite a lot of resources on that website. So there is some reconciliation methods that could be considered, or that is approved by NERSA through the regulatory rules on network charges for third-party wheeling. And they explain two methods. So it's option one is crediting of wheeled energy on the Boulle. So that's essentially taking that avoided cost from Eskom, which is what they would have paid, what it would have cost to generate that electricity, and remove crediting that on the Boulle at the end. Or there's the separate explicit wheeled energy on the Boulle. So that's calculating that full user system charges. So maybe to just go back to this picture, if you credit it, you credit what the Eskom energy price is. That's how the credit mechanism would work. And if you have a user system charge, you charge that specific charge to the customer. So it's two different methods of doing it, but it balances to the same thing. So I think that's the key message from NERSA through their rules, is that irrespective of what method you use, the municipality is going to recover the orange bit that they need to recover. So that makes sure that the municipality is whole. And I think the important thing to understand with these mechanisms is the avoided cost. So the avoided cost is the marginal cost the licensee would avoid in any given period if a distributed electrical energy resource provided electricity instead of the licensee. So essentially, someone else is providing electricity instead of the network service provider. But at the retail level, this would be the energy that the energy purchases cost plus potential technical losses. So that technical losses is also quite important. Currently, that avoided cost is WEP's excluding losses, the rate that's on Eskom's scheduled tariffs. And in the future, when we do shift to the market, we will start seeing it being the system marginal price. So conceptually, there's quite a few challenges for municipalities with this. So customers want to decarbonize and reduce cost, but their primary solution is behind the meter and better generation, like rooftop solar, which actively reduces municipal surpluses. Wheeling offers customers the same type of benefits, cheaper, cleaner power, but unlike behind the meter solution, it does not have that, it does not reduce municipal surplus. It also allows customers access to green power without requiring capital investment from municipalities. So I think that's quite a big challenge for municipalities, that if they want to provide greener electricity to their customers, that they would need to procure it. But with something like wheeling, you don't have to do that. The risk lies with the customers who are willing buyers. It is also one of the municipalities' licensing requirements to allow non-discriminatory access. So that's in all the NERSA rules and the ERA and so forth, is that non-discriminatory access is essentially one of the key pillars of the licensing requirements. And that means that anyone who wants to supply into the municipal network, the municipality needs to allow that within the technical requirements that there would be. And I think these two items are quite important. So there's a widespread concern that wheeling will reduce municipal revenue, surpluses, or income. And that is not necessarily true. And there's also a concern that traders and wheeling will cherry pick customers. So I think the reality is that gross revenue, so cash flow might reduce, but the municipality's net income or surplus will remain the same. So that's that user system bit that I spoke of earlier. And then by enabling wheeling in a municipality, it would maintain their customer base. So which it does sound that if someone wants to a private generator wants to sell to one of your customers, that they want to take that customer away from you. I think the main thing with wheeling and similar type of solutions is that it actually retains your customer base and makes sure that you retain that surplus. So it enhances that. It's actually the opposite of cherry picking in the way that you would lose revenue. It's actually protecting your revenue by different services. So some of the technical challenges we see with municipalities is that billing systems are incompatibility. So there's legacy billing systems that struggle doing these calculations. There's a data management burden from municipalities where they have to now start handling different types of data for smart meters and so forth. There's the Eskom debt block where municipalities with arrears in Eskom may be blocked from signing the necessary agreements to facilitate wheeling, but Eskom is working on resolving that with NECOM. There's resource constraints. Municipalities struggle to have the technical and legal capacity to do the complex user system agreements and wheeling frameworks. And then also metering infrastructure is quite important. And then complex tariff structures where you need to start unbundling and so forth. So there are quite a few technical challenges that municipalities face in implementing these type of solutions. But I think the main thing that you as a municipality should think about is structuring these systems in a way that to align to your needs. So if the solution enhances administrative efficiency, it's a good thing. I know municipalities don't want to necessarily have more work to do and so forth. So there's a lot of there could be a scenario where these type of solutions help with that administrative efficiency. And then you should focus on ensuring that the system, the mechanism allows you surplus neutrality. So looking at how the system would work to make sure that you don't lose your margins. Equitable participation is quite important, so then ensure the customer's participation doesn't discriminate between smaller customers. And then think trust in the reconciliation method. So a transparent process so that everyone who is part of the transaction has a transparent way to see that they are fairly compensated. So I think the intention with what municipalities need is when a municipality starts engaging with wheeling traders, IPPs, and so forth, is to start thinking of what the sort of customers would need, and then taking these needs of the municipality, which is administrative efficiency, surplus neutrality, equitable participation, and trusted reconciliation, into consideration when you do have these engagements with the various municipalities. And by adapting with the customer, they would set themselves up to be ready in the transitioning network. So almost anticipating what customers' needs are and start building solutions around that and building it with the customers who have these needs. Essentially, any business that wants to succeed needs to adapt with the customers they want to service. Yeah, I think that's my presentation for today. And thank you for everyone for listening.
Great. Thanks so much for the insights, Johan. All right, folks, so the Q&A is going to be open. Please pop your questions into the Q&A section, ideally not the chat. And if you have a question at the top of your mind, I can bet my bottom dollar that someone is thinking of the exact same question. So please do them a kindness and ask your question. But Johan, maybe if I can start, because I've got a couple burning questions for you. So let's recap a little bit. How does enabling customers to purchase from private generation compared to municipalities purchasing directly from private generation?
Yeah, I think that's a quite important question. So I think that one of the main things is that with something from purchasing from where a municipality purchases from an IPP, they essentially have to then take that saving that they would get from that and pass that saving onto the customer and their cost of supply mechanism. So even if the bulk purchase of electricity might be cheaper than what they would have purchased from Eskom, their balance sheet would change, and then effectively their future tariffs would change. So the municipality taking on that risk of purchasing from IPPs and signing 20-year contracts, no one has a crystal ball to know what the market would look like in 20 years. So it is quite a big risk for a public entity to sign those 20-year agreements with IPP. And it's a bit of a challenge. And then with something like wheeling or even the tokenized energy settlement system, it shifts that risk to the municipal customers, the willing buyers in the municipality, and essentially gives that same value, where the customer would get cheap electricity and they would get access to green electricity, but there's no risk for the municipality in terms of what if something would go wrong with the system. They don't take that risk onto themselves or on behalf of all their customers. So with wheeling and tokenizing of energy settlements, that risk is transferred to the customers to ensure that they the ones who want to buy that take that risk, and not all the customers. Yeah.
Perfect. Amazing. Okay. So Nick's got a question. He says, it is theoretically sound to say that revenue surpluses can be maintained, but this requires use of service charges that will not be insignificant because of the municipality's own costs and its need to cover. I foresee significant resistance from customers who think they are now purchasing power from third party, still having to pay monthly electricity charges to the municipality. How do you suggest this issue can be addressed?
Yeah, I would say that there's quite a lot of education that needs to happen within the space, right? So if there's an unbundling of tariffs that happen, and there is a specific use of system charges and a clear idea of what the subsidies and cross subsidies are, and so forth, and that is on the municipal account, that and it's clear what portion of that is energy, because technically you're already paying all those different aspects within your tariff. It's just bundled into one. But if we start slowly but surely start unbundling the various aspects of the tariff and starting to understand where the costs go, Eskom is already quite busy with that, with their updated tariff structures. And if municipalities follow suit, we will hopefully see an environment where there's an understanding of what components does go for your various aspects of your electricity bill. And just that understanding would take us quite far, I think, with that.
Great. And then Paul has also asked if you can just do a short recap on the wheeling slide again, just to centralize his understanding.
So I think Frank said in the chat that he'll do a recap on wheeling again in his presentation. So we can maybe just go through that then. And if afterwards we still need to do a recap, we can do that. But I think Frank is going to cover it again, and hopefully that a different explanation by a different person might help with the broader understanding.
Fabulous. And then I've got one last question for you as well, is what happens if independent power producers fail to deliver the promised energy?
Yeah, so essentially there's contracting that happens between IPPs and customers, right? So it's a private generator wheeling to or supplying power to a customer. And within that contracting, they would have agreements on how that is treated. I think some of the other speakers might also have some insight into that, but it does come down to how the contract is set up. But essentially, if the IPP can't supply the electricity to the customer is not going to pay for that because they didn't deliver the service. The Eskom is then going to have to step in and provide that balance to the customer, but then it falls back to the original way that municipalities would bill customers. So there is not necessarily a scenario where if that power can't be produced, that it just falls away and disappears. The system is built in a way that everyone is fairly compensated for the service that they are delivering.
Okay, fantastic. And then Cloud's also got a question. If municipalities currently operate the EDI at a loss, then surely if they can purchase electricity from the IPPs at a discount to Eskom, then some of that saving will not be passed on to customers, but will be used to make the municipal books balanced. Do you have any comments on that?
Yeah, that is a tricky question, and I don't necessarily have a right answer, but it becomes quite tricky because there is some inefficiencies in quite a lot of the municipalities, and I think what programs like the Metro Trading Services that National Treasury is driving, and also that the sort of unbundling of services and having sort of ring-fence services might help us understand where those inefficiencies come in. There could be value for a municipality in purchasing from IPPs and then having that additional value, but I think always that value needs to be passed on to the customer. Because it's essentially the cost of supply that needs to be looked at. And with the unbundling of the services and having the ring-fence services, I think it's what we would see start happening is that people are paying for, would then be charged and pay for the services that is being offered them. And yeah, but it is tricky within our municipal structures we have where everything is still in one big pot. But there is definitely a drive within the EDI to start unbundling those different aspects of the businesses.
Okay, fantastic. Thank you so much. All right, everyone, we're going to move on to the next speaker. Jill, we will address your question towards the end of the session. So next up, we have Dr. Michael Boulle from ICLEI Africa. He'll present on developing the foundations and projects for municipal just energy transitions. Michael's a climate, energy, and just transition senior specialist. With that said, he works at the intersection of climate change mitigation, energy, and just transitions for the Global South, and has more than 13 years of experience working in Southern, West, and East Africa, as well as Latin America. His current focus is on supporting African municipalities to develop and implement policies and projects for a just transition into low-carbon, climate-resilient societies and economies. So over to you, Michael.
Thanks, Lindy, and morning to everyone. Lindy, if you could just confirm you can see my slides in presenter mode. Great.
Yes, there we go.
Great.
Yeah.
All right. Morning, everyone. My name is Michael Boulle. I'm from ICLEI Africa. So just a little bit of background to ICLEI is, so we're a city network, a global city network, active in over 120 countries, and we organize into regional offices across the world. So I'm based at the ICLEI Africa Secretariat in Cape Town, South Africa, and we work supporting municipalities across South Africa, but across the African continent. And we work with cities of all sizes, large and small, rural and urban, and work across quite a wide range of thematic areas: climate and energy, biodiversity, urban systems, food systems, and really try to play an intermediary role between at this policy practice interface and trying to connect municipalities with finance. Just an overview of my presentation today. So I'll be speaking specifically from the experience of a project where we've been working with 6 municipalities in South Africa. Over the course of the last year, the project's a UK PACT funded project and is a partnership between ourselves and the Development Bank of Southern Africa. And really, the project is, I'll provide some specific insights from that project and what it included, but I think then really just trying to pitch those learnings in terms of how that's relevant for other municipalities and how that connects with the discussion today, wheeling. So in a sense, I'm going at the wheeling discussion, starting somewhere else and ending at the wheeling discussion to make the case for it and how it positions in this broader conversation. So I'll talk a little bit about the project preparation support we've been providing for municipalities, and then zooming out to the state of the electricity transition, particularly in South Africa. I'll touch on municipal readiness for participating in this transition, and some of the elements of municipalities' value proposition for participating in the just energy transition. And then finally looking at how municipalities can diversify their role in this changing sector and thinking through this in a phased and quite pragmatic approach. So some background to our project. So as I said, we've been working with 6 municipalities in South Africa, 2 in the Western Cape, 2 in Limpopo, and 2 in the Eastern Cape. Working with the Development Bank of Southern Africa over the course of 2 years with support from UK PACT. And the project is developing solar PV projects with these municipalities and developing it's providing pre-feasibility support, at the end of which we will hand the projects over to the DBSA. And then they will take those projects further down the project development life cycle towards bankable feasibility and then ultimately, hopefully, towards contracting and implementation with their embedded generation investment program. One of the opportunities to provide some concessional debt financing from the bank for these projects. So to give you a sense of the nature of the support and what these projects consist of, so there's a site assessment part of that. So looking at the site, the number of sites, and then really looking at the suitability of the site in terms of its terrain, the resource, permitting requirements, environmental sensitivity. Then, of course, the technology assessment, looking at different technology options, and looking at storage integration, and then importantly, grid impact assessments to understand, whether the existing grids can take the size of projects and any issues that need to be addressed. So that's really the technical components of these projects. In terms of financial part, we've developed financial models for each municipality, and that really looks at the capital expenditure of the project, and then the operation and maintenance expenditure, and really looking at essentially what would the tariff be for these projects and how that can meet the investment needs. To understand for the municipality what the savings could look like over the period of that plant, and how that compares especially to the Eskom tariff over the period projected. Then there's a transaction structure element to the projects, and that really looks at how to structure a project. So whether if it's a municipal own build, with the municipality providing on balance sheet funding or through debt financing, or through some kind of triple P arrangement, or as has already been mentioned, working with an IPP where the independent power producer develops the project, finances it, and the municipality enters a long-term power purchase agreement to offtake the power over the period of the project life, and either partial or full. So the transaction structure really looks at how the project would be structured, and the responsibilities of the different players involved. And then also a socioeconomic impact assessment to understand the broader socioeconomic impacts of the project and how this can contribute to the just energy transition at a very local level for these municipalities. So that's an indication of the work that we're doing with these municipalities. And I think the helpful part of really targeting these questions in quite a specific way in terms of project preparation, it reveals much broader themes and elements that municipalities are also tackling with. And so these are some of the insights that have been coming up as we've been supporting municipalities on these journeys. So I think, as Johan already touched on, really the electricity sector, both globally and domestically, is under rapid transition, and it's not so much a case of whether it's changing, it's when and how much, and really the choice to municipalities is to prepare and adapt or really be left behind. In the South African context, we know the Electricity Regulation Amendment Act and the wholesale electricity market, South African wholesale electricity market, have really changed the roles of both municipalities, but also other actors in the sector, and really changing the composition of the sector. And so, in a sense, the roles that municipalities have played, and indeed other players have played in the electricity sector, is no longer an accurate predictor of the future. And that's really driving the change that municipalities are needing to prepare for and adapt to. Municipalities obviously have a crucial role to play in this transition, and specifically to make sure that it's a just transition, but it's going to really require reimagining the old roles and really diversifying the set of roles playing, changing ways with working with new market entrants, and I think importantly, really fulfilling their developmental mandate and ensuring that this transition benefits municipalities and their communities. One of the from what this project preparation work is doing is, I think, shining a very direct light on the realities of participation. And there's been a lot of focus on large scale or medium scale generation and municipalities' role in that, even whether through municipal own build options or triple Ps or working with IPPs. But the requirements are onerous and out of reach for many municipalities, given the state that they find themselves in. So there's a lot of work that needs to be done to prepare for attracting projects like this. But importantly, to also stressing the need for municipalities to diversify their approach for participating in the transition, and not just focusing on project preparation of large-scale projects. So how do we bridge this gap between where municipalities find themselves and the expectations of private capital? And so we've done some work on really trying to understand the readiness of municipalities for participating in the transition, to understand what their current position is, areas to address, and where their strength and competitive advantage lies. So I think obviously the state of the Eskom account and Eskom debt is a crucial one that any financier is going to look at, whether for lending directly to a municipality or when the municipality is an off-taker of the power. Audit outcomes, of course, an important one that give a reflection of the state of governance. Really key is revenue collection performance. What does that electricity business look like, and what are those electricity revenue collection rates at? Because if you enter an off-take agreement with an IPP, that's the way that they pay back the finance that they've raised. So revenue collection performance in the case of electricity is crucial. And then political support and mandate. We know that the municipal space is changing. We obviously have local government elections towards the end of this year, and really trying to embed projects like this and commitment to renewables and this transition in a way that will outlast a single term in an administration. And then lastly, just really an understanding of the grid and the understanding of the infrastructure to understand what's possible and where investments are needed to enable new generation to come into the distribution grid. So what's the value proposition for municipalities? What are the levers to pull on to participate in this space? And I think that municipalities obviously have a unique value proposition, and I think it's about honing in on these areas and then trying to pair that with appropriate options. So obviously there's really the wires that the municipalities own in terms of distribution grid, control of the billing and metering systems and the data that generates, the existing relationships municipalities have with customers, the approvals that municipalities have the authority over that can really accelerate the progress of projects, and in some cases have land which they can lease out for projects. So municipalities certainly can position themselves from a place of strength, but really need to hone in on those fundamentals and understanding how they can leverage it. And I think, importantly, and I think Johan started to touch on this, is the long-term sustainability of municipal electricity businesses and addressing areas that are problematic ones. And all of these essential for protecting the interests of residents, particularly low-income households in a rapidly changing market. So where this project preparation support has led us is really an emerging emphasis on pursuing multiple options, not looking at just one option. It's not a case of either or, but really diversifying that menu and exploring options in parallel and thinking about their appropriate sequence. So just to pick up on some of those examples, generation, I've spoken a fair bit amount about, and I think that continues to be a crucial area that municipalities should continue to invest in. But then there is like trading and aggregation, playing this intermediary role in SOM, unlocking SSEG, small scale and better generation, and really creating an enabling environment for this, for SSEG through high smart metering penetration, having the SSEG framework in place, having the tariffs in place, and really seeing that as an opportunity rather than a threat. Wheeling and the various models of this. I think Johan has touched on that, and Frank as well. So just I won't go into this in any more detail, but just positioning it as one of the many options municipalities can explore simultaneously. And then I think, a key part of this is paying attention to sequence. Not all of those are equally viable at this point in time. And there's an important element of sequencing what is focused on at a point in time to open up the options available to a municipality as time unfolds. And underlying all of this, and I think it's a big point of conversation, is building the internal capabilities within municipalities for exploring and executing these options. We know that municipalities have deep experience in the electricity business and in terms of how that's done. And it's really about leveraging that, but also adapting that given the changes in the market. And really, that's a key part in ensuring that municipalities can participate and benefit in this transition. So I think this is my last slide. Just a pragmatic and phased approach seems like an important part of all of this. Really, not starting with the most ambitious project and not being able to get anything done, but laying the foundations for participation, things like a well-maintained grid, bidirectional smart metering, improving revenue collection performance and audit and financial performance, and those supporting capabilities, because that's really the bedrock of under all these different options. Understanding the state of the electricity business is a really important one, not taking it as a given that it's generating a profit. I think that that municipal surplus slide that Johan started with was really striking to see what's happened to the margin and municipalities now struggling with the deficit. So things like electricity master plans, cost and supply studies, SSEG frameworks and tariffs, and really understanding what the costs and revenue are of the electricity business to understand where it's at. And as you build these foundations and then start to explore things like SSEG or wheeling and addressing some of the underlying issues today, can really start to build the case for more ambitious action. So once having successful pilot wheeling, for example, and SSEG, you could well be in a place to be a much more enticing off-taker to an IPP in a large-scale project. So just thinking about it in terms of that and the positive impact that progress can have. I think that, at this stage, viability is crucial and demonstrating progress is crucial. So really addressing those low-hanging fruits that can speak to municipal concerns but are viable at this point in time and open up options going forward. So I think I'll stop there. It's a bit of a different approach to the wheeling discussion, but I hope connecting up this differently from a project preparation support perspective leads well into the discussions we'll continue to have on wheeling and the importance of the various options for municipalities. Thanks very much for your time.
Thanks so much, Michael. Really informative. Everyone, the Q&A is open, so please ask your questions there. We already have one question. Clyde asks, what options are available to municipalities that don't have distribution licenses? In other words, they are supplied by Eskom distribution, but would like to participate in a constructive manner to enhance electricity purchase options for their residents, particularly customers who would like to purchase green electricity. Any insights to add there, Michael?
Thanks, Clyde. I mean, just say that we're working with municipalities all who have distribution licenses, so that's where kind of these insights are from. So I'm just thinking about this in real time and thinking about what those options are, but definitely not the best person to answer that.
Right, we can bring that back up at the end of the discussion and pull in all the panelists to answer that, Clyde. All right, I do want to quickly ask you a question as well, and I'm guessing that this comes up in conversations with you, Michael. In your view, I mean, how and why should municipalities engage with funders and financiers to attract finance for their projects?
Thanks, Lindy. So, I mean, what we've seen is that obviously municipal budgets are under a lot of pressure, and most municipalities aren't able to use internal reserves to fund projects like this. And so that creates the imperative that they engage with private financiers, but that's quite unfamiliar terrain for many of them. And so I think the important part is really municipalities are quite clear on their objectives and expectations of projects like these, but maybe from the start of those projects don't consider the expectations of anyone providing the capital for them. So I think the first thing is really to understand, to engage from very early on. So we've been engaging with DFIs, commercial banks, funders, to understand, what they're looking for to participate in a project like this, and to really understand what those expectations of capital are, because those are the ones that are going to need to be met further down the line. So start on that as early as possible. But then I think it's a two-way street on ensuring that financiers also understand the context that municipalities are in and what they bring to the table and where risks and opportunities are. But I think both parties sort of start quite far apart from each other, and having that conversation early and trying to understand where they can be convergence or where they can move closer together is a key part for both parties to try and address the expectations and requirements of the other side. And I think through doing that, you can then start to put in place quite early on how to address some of those things that a lot of the time are beyond the specific project itself. The specific project itself could make good sense, but within the broader municipal context, whether governance challenges or financial challenges or grid infrastructure challenges, then it falls down. So it points to kind of where work is required. But I think, it really to stress that it shouldn't only fall on municipalities, but financiers to also think about things differently and think about risk and opportunities differently, because we're trying to identify new ways of making progress that haven't been done before, and that requires all actors to shift, not just one set of actors, I guess.
Great. Thank you so much, Michael. Really helpful and informative. All right, we're going to move on to our next speaker, Matthew Cordeur, who is the Infrastructure and Just Energy Transition Research Manager at Krutham. Matthew will be presenting on Policy to Power, 10 actions to deliver green, accessible, and secure electricity. Just to give you a bit of context and background to Matthew, he is responsible for leading research engagements and provides strategic advice on infrastructure and the just transition and sustainable development policy and finance. His focus is on electricity, water, freight logistics, passenger rail, roads, and infrastructure finance. As Krutham's research manager for infrastructure and just energy transition, he specializes in policy analysis, stakeholder engagement, and real-world impact. All right, Matthew, over to you.
Thank you so much for having me, and hopefully you can see the presentation clearly. So as you know, the SAITA, the South African Electricity Traders Association, published this report last week, setting out 10 actions to deliver green, accessible, and secure electricity, as the title says. And it was a really good process, really, to bring the views of the traders together, and really to look at what government is doing and what it's doing well, and also look at the gaps and the blockages and set out the actions that we need to move us forward. And what is interesting is that government is doing a lot of it, has a lot of plans, and a lot of it comes down to implementation. And I mean, how did we get here? Is really important in the whole story. And first of all, we had a lot of load shedding due to a lack of security of supply, and that really came to an end at the sort of early last year, and due to a lot of hard work at the coal power plants, etc., in 2023 in particular. But we do see load shedding coming back. We do see it coming back in 2029 onwards if we don't get things right, if some of the reforms stall. And as growth starts increasing, as we start showing growth in the economy, and as coal power plants start being decommissioned. So it is very important that we get things right. And you can see that the liberalized market is taking off with 18 gigawatts of NERSA private registrations as at 29 January. With the bulk of it coming from solar, a lot of rooftop solar, and wind taking up the other sort of a third of those registrations. So I think the big thing is how we are shifting from this monopoly system to a competitive electricity multi-market, and that's a given, and it's going to attract a lot of private investment, and over time it will lower costs. The unbundling of Eskom is a central reform, and it creates the foundation for the whole wholesale market, and for real competition. And I think that the important thing that National Treasury and government have realized is that the scale of new generation required, with coal decommissioning having to take place, and also grid investment, can't be funded by the public sector alone, and that private capital is essential. And so that's why reforms under the Energy Action Plan, and now with the launch of the SAWIM, is moving into a critical phase of implementation, clear rules, and institutional coordination. So what we see is that early momentum is visible, there's strong private investment appetite, and there's a growing trader participation. But delivery certainty will determine the success here. So I'm going to move on to the next slide. So why do these reform? I'm going to just jump back to the slide. Sorry. So we've seen that the reform is underway. There are policy shifts. There's been institutional change, and there's rising private investment. Activity is high, but efforts remain fragmented across institutions. So the priority now is to have one coordinated plan, with clear actions, roles, and responsibilities and timelines. To have, I think we've heard this word sequencing, so important, but sequencing critical decisions around to unlock certain reforms ahead of others, and to align Eskom stabilization and to have unbundling with credible market rules. What we want to achieve here is to provide policy certainty and predictable frameworks to unlock private capital, to bring government, the regulator, Eskom, municipalities, and investors onto a shared pathway. And the goal is to create a fair, neutral, bankable market that attracts investment at scale and delivers reliable, affordable electricity. So now the focus on delivery, clarity, coordination, and execution. So what we found when we did this research was that there's a reason why the reform is so important. I mean, if you look at the average electricity prices, for example, they increased almost 1,000% from 2007 to 2024, which is more than 100 percentage points above cumulative inflation, which is at about 155%. To unlock growth, we need to remove power constraints, lower costs, and crowd and private investment. We need to strengthen security of supply by diversifying supply beyond Eskom and enabling new generation and system flexibility. It also enables decarbonization by accelerating renewables, and that will support corporate targets and limit carbon risk. What we found is that for financial close in the last couple of years, that 56% are going towards traders. Now, what we found was that in 2023, most of the financial close, about 4.7 gigawatts, was going towards bilateral agreements. 2024 it was sort of mixed, and then in 2025, the bulk, sort of 80% or so of those PPAs that had reached financial close are going towards traders. And the pipeline of about 18 gigawatts going forward shows the trends that a lot of the private sector C&I IPPs will be moving more towards traders. So it's not an emerging industry. I think it's really it's here, and it's already contributing to the sector. So an important stakeholder to engage with going forward. So what we found when we did our research for this report was that there's still key blockages that need to be resolved. And a lot of this is known. So transmission build constraints, the hockey stick issue that we know so well around the build rate picking up only from 2028. There's obviously plans afoot to arrest that with EPC and ITP builds, but it's something that we sort of need. For example, the independent transmission system operator with its own assets will be an important change that's happening. The Eskom's transition and market functions with the SAWM and the like is very, very important, and making sure that those are all unblocked. A key issue that we found was a lack of reform roadmap and accountability. The municipal distribution crisis was one of them, with EDI reforms underway, and then regulatory certainty and oversight, especially when you've got a minister that wears hats around shareholder and oversight and having executive functions over NERSA, for example. These are sort of key blockages that we found in the report. I don't want to go through these in too much detail because I'd like to focus on two of the actions, but I just want to see if I move to my notes screen, can everyone still see the presentation?
Yes, it looks like it.
Great. All right. So I just want to go briefly through the. I would like to focus on actions 6 and 8 in this presentation, but just briefly the 10 actions that we identified. The first one was to publish a cabinet endorsed reform map, setting the market end state, providing key milestones and sequencing. Here we also would like to align institutional roles and responsibilities, and ensure that we provide political backing, accountability, and investor certainty. Now, we understand that such a draft plan is within the DEE, and they are working on it, and the recommendation is really to ensure that this is robust and gets to cabinet ASAP. The next action is to finalize the electricity pricing policy, and we've seen it now with the smelters. We've seen it crises pop up with plasters and short-term mechanisms being put in place, but we need to establish long-term price certainty, implement cost-reflective and bundled tariffs, and align regulated pricing with competitive market outcomes to support bankable PPAs. Action 3 is to strengthen the DOEE and NERSA.
These are happening, but the outcome and the output of these needs to be robust, and it needs to happen with prioritization, because we need to build technical skills, we need to build capacity and resources within both the department and the regulator. This will help improve licensing, monitoring, and enforcement. And it will also reduce uncertainty on grid access, pricing, and compliance to support investment. Defining a credible end state for Eskom holdings is our fourth action, where National Treasury really needs to play a strong role here to set a clear end state for unbundling with firm timelines. And this goes beyond the TSO, but TSO is obviously an urgent priority there. Defining the future role of Eskom generation as fleet declines, separating commercial interests from network and system operations, and establishing a sustainable balance sheet to align support with the performance. On action 5, I think I sort of spoke about the TDP, the Transmission Development Plan, and how we need to accelerate this grid expansion. This is a massive action required for the ability for more wind and solar to come onto the system. There are risks, obviously, as that happens, but that needs to be managed and understood clearly. The enablement of non-discriminatory access for bilateral trade and the wholesale market will rely on this. And so we need to focus on how we reduce that congestion and connect capacity faster. Then skipping 6 and going to 7, we need to finalize the trading rules. We need to ensure that traders are recognized as independent market participants, that we enable bilateral transactions alongside the wholesale market, and that we apply consistent, proportionate rules and remove regulatory friction. We also need to limit trading rules to bilateral contracts with the market code governing the wholesale market. Then obviously the launch of the wholesale market, action 9. So you see sort of NTCSA has now got the latest market code on its website. Apparently it's submitted to NERSA finally. But we haven't seen any action from NERSA yet in the coming weeks to even look at this. They also need to be looking at vesting contracts. So they've got a lot of work to do to launch. It sounds like the new internal launch is in June this year and an external launch in September. And what that external launch looks like, it could be a partial launch with vesting contracted coal plants and REAP projects at the start, and then slowly bringing on board, opening it up to the market. This is going to enable competitive price discovery to support our sort of search for affordable, secure investment. And then action 10, another important one, enabling cross-border electricity trade. We need to support regional trading to deepen liquidity and diversify supply. We need to align cross-border transactions with domestic market and wheeling rules, and we need to build on existing regional arrangements. It's important that we integrate South Africa with neighboring power systems to strengthen this multi-market model. So then if I just move to, it's a deep dive on action 6 on EDI reform. So municipal distributors carry a large share of the electricity grid. Financial and operational health will determine whether electricity reform succeeds. And these reforms need to stabilize distributors, enable market participation, and maintain cross-subsidies that support municipal services. So the key issues are around financial instability, where many municipalities face rising debt, declining sales, electricity sales, and weak revenue collection. Electricity revenue subsidizes other municipal services, which can distort tariff structures. And then there's also continued reliance on National Treasury, which is unsustainable. The distribution system is fragmented. It's split across many municipalities and Eskom, leading to inefficiencies and uneven service quality. Tariffs and technical standards and operational capacity do vary quite widely. And then from a governance and capacity perspective, there are quite a lot of constraints here. Skill shortages, leadership instability, and weak asset management affect performance. The compliance with NERSA license conditions is uneven, and enforcement and regulatory oversight remain limited. In terms of infrastructure and maintenance backlogs, there are aging networks and insufficient maintenance, which threatens reliability. Technical and commercial losses remain high in many municipalities. So from a market transition perspective, there are a lot of pressures here on municipalities. Embedded generation, wheeling, and the SAWIM will change the role of distributors. Many municipalities lack the systems, processes, and skills needed to operate in a more decentralized electricity system. And so there's uneven readiness across municipalities, where some metros are advancing reforms in digital systems, while smaller and financially weaker municipalities risk falling further behind. So our recommendations here is there's an EDI reform map that's being developed with Operation Boulle and DECOM, and this needs to be published and implemented, this reform roadmap, and a set of sequenced reform pathways that reflects differences between municipalities needs to come out from this. We need to restore financial sustainability by moving towards cost-reflective tariffs based on proper cost of supply studies. We need to address municipal debt and improve revenue collection and reduce reliance on fiscal transfers through operational improvement. So through ring-fenced municipal electricity business, we can potentially achieve this by separating electricity trading services within municipal accounts and improving transparency, financial discipline, and accountability. We also need to strengthen regulation and oversight at NERSA by expanding their technical capacity and introducing performance-based regulation, benchmarking, and enforcement of licensing conditions. We need to modernize the distribution systems, accelerating the rollout of smart meters and advanced metering infrastructure, improving billing accuracy, reducing losses, and enabling bi-directional energy flows. And we need to support municipalities to participate in the new market by providing standardized wheeling framework systems and templates where needed, and building technical capacity to manage distributed generation and power procurement. And then we need to align EDI reform with broader municipal reforms, coordinating with the review of the white paper on local government and Treasury's trading services reforms that are coming up. And we need to ensure that electricity reform supports wider municipal financial sustainability.
Matthew, thank you. This is fantastic insights. We are coming to a little bit of a close and needing to move into the next section. So maybe we can move on to the Q&A if that's right.
Can I just make one or two points on wheeling? So I think the main points around wheeling would be the standardization and automation, reconciliation, and billing. And I think a lot of people have been speaking about that today. And I think in this paper it was mentioned equally that this is really important. That if you look at that sort of 18 gigawatt pipeline that they've got, we can't rely on Excels and sort of the way that it's been going now. We really need to drive technology. We need settlement, reconciliation, and energy accounting to really to be strengthened and standardized and automized. I think that would be a key area there. So I'll stop there. Thank you very much. And just to mention that the report is on the SAITA website, and so you can read more on the recommendations and the insights there.
Thanks very much, Matthew. I think let's open the Q&A. I know that there already have been a few questions in the chat. Please, everyone, remember to keep your Q&As to the Q&A section. There was a question around if you have any insights if you see that load shedding is going to be returning in 2029, and having an unclear energy market, it's very difficult for anyone and for companies to plan, noting that many of these renewable solutions rely on load shedding before being a reality for better financial feasibility. Do you have anything to add there, Matthew?
So what is the question exactly around load shedding? How to plan for it, or?
So do you foresee it coming back in 2029? And are there any ways to sort of mitigate the planning around it, or any recommendations that you have that companies professionals can do? Any
I think that was the point. I think that was the point of the actions that we were providing, was that's what will happen. That is what's going to happen if we don't address all of these issues in terms of prioritization. That for example, if we don't resolve grid access, if we don't enable the investment and the introduction of renewables and other forms of baseload power through batteries and etc. That if we don't resolve these issues, we are going to see load shedding coming back, and it could be any one of those blockages that we mentioned that could result in more load shedding. We're not out of the woods yet. We shouldn't celebrate anything just yet. And if we achieve one of those actions, if we achieve 8 of those actions, then it could be another 2 of those actions that undo us in terms of load shedding. So it's not a given, and it's a fragile system. So I think we're going into the implementation phase. Everyone has to put their heads down and work really hard now and understand what's at stake. So I think for municipalities, it's the EDI reform, and it's getting wheeling done correctly and resolving those issues around automation and finding the wheeling structures that work for specific municipalities. It depends who you are. What can you do as a stakeholder in this whole environment? And I think the actions help sort of spell out those. And I think there are more, and there are other sort of key areas that require more attention. I'm sure someone like Frank would probably give you other issues that need to be resolved, but there are many that we need to be focusing on. And so there's definitely no certainty that we will not face load shedding based on the current trend.
Okay, fantastic. I know Santosh has also asked, where are we right now in terms of municipalities adopting wheeling frameworks? Do you have some thoughts to add there, Matthew?
So I think Frank's going to probably cover a lot of this in his speech, but I think it's around between 10 and 20 municipalities that have got wheeling. Frank, is that? I think it's around there.
Yeah, hi Matthew. I think
10
it's actually
municipalities.
less than that are actually implementing and working. It's probably less than 5, although there's a lot of municipalities looking at it. And that's exactly what I'm going to talk to, the fact that there's a lot of challenges to get wheeling working. That's up next.
Exactly.
Fantastic. All right. Any last questions for Michael before we move on to Frank?
Or Matthew.
Matthew, sorry, my mistake. Okay, all right. Let me introduce our final speaker. Frank is the project lead for Tokenised Energy Settlement at Meridian Economics, and is a well-known renewable energy personality in the South African green energy space. He'll be presenting on Tokenised Energy Settlement, affordable green electricity for municipal customers, and revenue protection. For those who have not yet met Frank, he is passionate about addressing multifaceted challenges of climate change and electrification across Africa, as well as electricity challenges in South Africa. He built his first commercial grid-tied solar project in 2002, and his first off-grid community solar wind battery plant in 2003. And he further supports the renewables industry as a governing committee member on SAPIA. So Frank, over to you. I know you're going to be covering a lot of these questions that everyone has at the top of their heads. So looking forward to your presentation.
Thank you, Lindy. I appreciate that introduction, and good morning, everyone. I think it is still morning. Thank you for being with us for this seminar. I hope you can see the presentation. It should be shared. Please shout if you can't see it. Yes, I think all of the speakers before me have spoken a bit to setting the scene around energy in municipalities and how customers are struggling to access affordable, clean power, and how municipalities are struggling to maintain their revenue base and provide services. The Tokenised Energy Settlement I'm going to talk about today is really a novel concept that has been architected out of Meridian Economics to try solve some of these problems. You may have seen this previously called token wheeling, and we've changed its name from token wheeling to Tokenised Energy Settlement because we realized what we were doing was in fact not wheeling, although it gave the same outcome. So if you've heard of token wheeling, this is sort of token wheeling 2.0. So let me get into it. I think some of the challenge has been outlined already. That again, we all are looking for cheaper, cleaner power if we can, and municipalities want to keep their customers and protect their revenue base. I think we're already seeing some challenges where large customers are leaving municipalities to go to Eskom to get cheaper power because the tariffs are lower with Eskom. And high tariffs are, for many, perhaps an existential threat, both to businesses and if customers leave, then that's a problem for municipalities. And I think as the speakers have unpacked, it's really hard for municipalities to buy power directly or implement wheeling. And this means we sit in a space where, something like 45% of customers or 45% of something like 60% of customers using 45% of electricity can't actually access cheaper power. I'll cover wheeling again because it came up in the questions, but it's really an energy accounting system that sort of allows a customer to have an allocation of the energy that comes from a private generator. You basically have meters and you run an accounting process with a credit system. It's important to note that even though we have this term wheeling, which implies like something being moved from one location to another, the energy that goes in from an IPP isn't actually the same energy received at the customer's base. The whole wheeling thing is actually a fiction to describe or to solve for this problem. But in this fiction, because you're doing physical energy accounting, it leads to you having some pretty complex implementation requirements for municipalities. And perhaps that's best illustrated with an image. So in the normal world, Eskom is selling power to municipalities, and municipalities are on selling that power with a markup to cover their distribution costs to their customers. In the world of wheeling, a generator comes along. Let's assume the generator's in the municipality, and they now also become a supplier to the customer. So the municipality is now sharing supply of energy to the customer with this IPP, with this generator, and the customer signs a power purchase agreement to pay for that energy. But that it's complicated because, first of all, the generator needs to connect, and that's hard enough in itself in terms of setting up the technical requirements and the use of system agreements. But the customer then needs to have new metering. The municipality has to implement new tariffs. The invoicing needs to change to show the credit for the private power that has come to that customer. And then there's a plethora of contractual arrangements that need to be put in place, use of system agreements and the like. And what we've seen is for municipalities, especially smaller municipalities, this is really hard. Even the metros are struggling to get this going. I mean, Cape Town is on their way, and Nelson Mandela Bay has something working, George maybe as well, but it's very limited, and it's still actually only servicing large customers. Small customers, LV customers, even on the Eskom side where wheeling is working, these sorts of customers cannot access the private power. So this is some of the challenges with conventional wheeling. As I say, even for Eskom, who's been leading in wheeling, their systems are far from actually being completed and running smoothly. And then implementing all of this for municipalities is really difficult with all of the things that need to be done there. And so, in a sense, if you look at that pie chart, the red segment sort of speaks to who can currently access cheaper green power through wheeling, which is mostly large Eskom customers, but that we sit with a huge portion of that actually cannot access third-party private power, and certainly not in a way that also helps the municipalities remain sustainable. And so I think that's the challenge, is that we're looking at municipalities and we see that actually for almost all municipalities, wheeling isn't working and is going to be really difficult to implement because of these requirements. And so Meridian Economics, where this concept was developed, really looked at this and went, isn't there a simpler way? Is there not a way that we can get rid of all of this complexity and simplify this into some other architecture where the municipality still keeps the customer, sells all the energy, but yet that customer can still access the value of cheaper power? And this led to this innovation that we call Tokenised Energy Settlement. Previously token wheeling, now TES. And again, we're calling it TES because it isn't actually wheeling, although it leads to the same outcome for customers. And it's really a big shift from that energy accounting model that I described with energy credits and sharing energy flows to customers to actually financializing that power, that energy. And I am going to walk you through it in some detail, but the concept is simply that if a generator feeds energy into a municipal grid, the municipality takes ownership of that grid, but the municipality experiences a saving and avoided cost in that they did not buy that energy from the municipality. That saving we capture as a credit note, what we call an ECT or electricity credit token, and we make it tradable, that it can be sold from the generator to a customer and used by the customer to pay their bill. Now, that's a lot to take in, which is why I'm going to show you some examples. But I just want to highlight that the conventional and virtual wheeling that exists, we're not looking to replace that. That still has a space and can work for certain customers. But what we want to do is have this complementary alternative that can unlock for many other customers in municipalities, including LV customers and prepaid customers. And before I get into the slide, sorry, this slide might have been a little out of place, but who's driving this? It's Meridian Economics, which was introduced earlier as a very well-known economics and energy consultancy in South Africa. We've been working very closely with Weber Wenzel on the legal framing of how this works. And so we're quite confident that the solution can be implemented easily by municipalities. And we've had a lot of support from the public sector in this as well. So yeah, that's just a little bit of background. But let me show you how it works. If we go back to that diagram you saw before, municipalities buying power from Eskom and selling it to the customer, we leave this relationship with the customer the same, so that the customer still buys all their energy at standard tariffs from the municipality. And so this is why it's not wheeling, because there's now no second supplier of energy. So this is just really important to note that this relationship stays unchanged. When the generator now feeds energy into the municipality, as I said, that creates a saving. The municipality doesn't buy energy from Eskom. We capture that as a credit note, like a digital IOU or a digital voucher. The generator sells that to the customer, and the customer uses that to pay their bill. So you can see there's basically now a financial product moving around between the municipality, the generator, and the customer, the thing that we call the electricity credit token. Let me show you how it works with numbers, because that will probably make it the clearest. So there we go. Let's assume it's 12 o'clock, or between 12 and 1 o'clock on a weekday. That's when the Muniflex tariff from Eskom to a municipality is, say, R1.63. And let's say the municipality sells to their customer at that hour at R2.40, and thus the Munich would be making 77 cents on every kilowatt hour sold. So the customer, let's say between 12 and 1, they use 200 kilowatt hours. They're going to get a bill for 480 Rand for those 200 kilowatt hours. This remains unchanged. As I said, they still get billed for all the energy they used. Now, the municipality would be buying at R1.63. But now let's say the generator comes along that wants to contract with the customer, and this generator feeds in 100 kilowatt hours into the grid, into the municipal grid. As I argued, the municipality actually experiences a saving because they take ownership of that energy, but they didn't have to buy it. So they saved on buying from the Eskom side. They've saved 163 Rand, the 100 kilowatt hours times their tariff. And we then basically, on behalf of the municipality, this is what the tokenized electricity settlement system does, is issues that as an ECT, this credit note or this voucher from the municipality to the generator for 163 Rand. Now, when the generator contracts with the customer, it's actually to sell that voucher. Previously, the generator might have signed a PPA at 1 Rand a kilowatt hour, but in this case, they agreed to sell those ECTs at the equivalent to 1 Rand a kilowatt hour. So they were 100 kilowatt hours. They sell it to the customer for 100 Rand. And so straight away, you can see the customers experienced an arbitrage of 63 Rand because they've bought this voucher from the municipality worth 163 Rand, but they've only paid 100 Rand. So they've experienced the saving of 63 Rand. Now, this is where the magic of tokenized energy settlement happens, and it's the settlement side that when the customer comes to pay their bill of the 480 Rand, they pay it with that credit note, that ECT worth 163, and the balance in cash. So you can see there that the customers paid their full bill of 480 Rand with those two instruments. This is what tokenized energy settlement enables. And you can see that the municipality is revenue neutral, because the 163 Rand that they saved on the municipal side matches the 163 Rand that they've received in payment of the bill. And thus they still make their full margin on the electricity sales. They're still selling, that 100 kilowatt hours was also still sold, even though it was supplied by the generator, it was sold by the Munich, and they made their 77 cents margin, as they would have if it had come from Eskom. So in some senses, what we're doing is replacing Eskom power with power made in the municipality and allowing that saving generated to be traded to the customers so that the value can be shifted to customers. The value in this is that the municipality doesn't need to take any financial risk in this. The financial risk is taken between the customers and the generators and the contracting there. What the municipality does have to do, of course, is honor these digital credit notes in settlement, which match the offset. So this is what we think it unlocks for municipalities, that it makes it quite easy to implement, because you only need to implement on the settlement side. And it's worth noting that pretty much all municipalities are able to receive settlement information from third parties. There are prepaid vendors submitting data on the revenue they collected. You can pay your bills at Pick n Pay and Checkers, and all of that information, including the customer information, flows through, and the municipalities can record that against their customer accounts to show that bills were paid. The municipal revenues are protected because the margin made on sales remains the same. Customer remains solely that of the municipalities, and this also makes it easier to do those cost of supply studies. We can also enable, so LV customers that are on postpaid, it's easy. If they're on prepaid, the prepaid vendors can hold the ECTs on behalf of their customers and pass the savings on to their prepaid customers. So this, I think, unlocks very strategically a segment of the market that currently to date is really difficult to access cheaper power. If you can enable this for all small users, township homes, small homes, to access cheaper power that they're buying on a prepaid basis, we think that's a massive unlock value for municipalities. We've looked at the MFMA quite extensively in this, and although procurement is required, because this platform is an open platform that anyone can use to buy and sell these ECTs and create this value, our understanding, and we have quite a lot of legal work done on this, is it doesn't need to be done through tendering. It's something that municipalities can implement through policy and through procurement approval. And ultimately, because what we're doing is actually not any form of electricity selling, that it's a financial instrument, that then a trading license isn't required, and you don't need to comply with the wheeling rules from NERSA either. This makes it really, again, easier for municipalities to implement. Customers, they get to access the value of cheaper power because of that saving that's created for them. We can also show the traceability of those green attributes. So if they want to do carbon accounting or generate renewable energy certificates, all the data relating to that green power is there. And I think most importantly, it gives customers a strong reason to stay where they are, because if in your municipality they can access cheaper power, that's a real value add to them in the municipality. And then if we compare the various options from behind the meter, small scale embedded generation, or municipalities procuring their own power, or conventional wheeling versus our tokenized energy settlement, we think this ticks pretty much all of the boxes around all of the things that are difficult. The problems with SSEG, I think one of the big ones is that, and I think this was raised in the questions around, the fixed charges and the use of systems charges, that often gets avoided by behind the meter systems. In our architecture, the municipality is still selling all the energy with all their margin and recovering all the fixed charges and all the fees there. And procurement, and I think this was flagged, it's really hard for municipalities to procure their own power. And it's not like they can take that value to their bottom line. The savings that come from privately procured power do need to be passed on to customers in the next tariff revision in terms of the cost of supplies. So, and I think certainly in my conversations, I think that's something that's often been misunderstood, that municipalities are hoping that by buying cheaper private power, they can take that saving to their bottom line. In fact, they can't. They have to pass that on in their tariffs to customers. So where are we? We're looking to pilot this. We have 1 or 2 municipalities that are already late stage. We've had 1 municipality that's passed this as council policy through a council resolution already. So we're expecting to have a pilot up and running pretty soon. But we're looking for more municipalities to pilot this with, to show that this concept can work, it can deliver on its promise, that it can unlock cheaper power for all customers. So we are developing and have mostly finalized sort of like a municipal playbook, which is a whole list of what you would need to do. If it's your municipality and you're looking to do this, we can share that and we can take you through what else is required in terms of a pilot. Yeah, so maybe let me wrap up there. A reason to be short and sweet, getting to the point. I'm very hopeful that we have lots of questions that I can try and unpack a little bit more. But yeah, my contact details are there. You're also welcome to reach out directly. Thank you.
Fantastic. Thanks, Frank. Lots of insights there. Would everyone like to add their questions to the Q&A box? And Frank can unpack those. While we're getting some questions going, Frank, one of the questions I had for you was, there is the pilot phase or duration. How long does it in essence take for a municipality to actually get the system working? What can they expect in that process, and how do they prepare and get ready for being part of this pilot?
Oh, no, that's a great question. So I think if it was fast-tracked, we could probably get to an implementation point in maybe 3 months. In reality, it's probably a 6 to 12-month process in terms of all the engagement that would be necessary. But the process is really to get the council to pass the resolutions to support this. That requires public comment process as well, and obviously a lot of education and understanding the benefits of tokenized energy settlement. And then one needs to get a project up and running to actually run the pilot on. The fastest would be to use an existing power plant. So maybe I like to use the example of a school, that maybe a school has built a solar system. The school's using that energy all the days during the week, but on the weekends, that energy is actually being throttled back because they can't export it to the grid and they can't generate any revenue off it. So that school's weekend and holiday power could now be, in a sense, commercialized as revenue for that school through TES and have that sold to another private customer in a municipality. So if there was a solution like that, then it would be very quick to implement. If a power plant had to be built from scratch, say the pilot was as with one of the municipalities, we're looking for the pilot to be between a 1 and 5 megawatt rooftop solution, then that might also take a couple of months to build. So, so like I say, in a magic world, it would be 3 months. I think in a realistic world, the total process to a pilot up and running and transacting is probably closer to 9 to 12. But that's where we are. Yeah.
Okay, fantastic. Got a question from Nick as well. He's sort of asking about how does it look from the customer's perspective? So as a customer, how do you pay? And how does, if you can unpack in a bit more detail, how TES works with the prepaid customers?
Okay, so if I can go back to this slide, hopefully the slides are still showing. So the customer is basically has a transaction with the generator where they are paying the generator 100 Rand in this example to receive this electricity credit token worth 163 Rand. So the tokenized energy settlement system is what's tracking all of this and then allowing the customer to use that to pay their bill. So the actual only hard cash that flows is between the customer and the generator. Now, if this customer was sorry?
Do you mind pulling up? I think you're meant to be sharing your screen.
Sorry, my screen got cancelled. Wasn't by me.
Yeah, if you don't mind.
Thanks for pointing that out, Lindy. Can you see it now?
2 seconds. There we go.
Okay. So sorry, I was just making the point that the only cash flows between the customer and the generator, pays the generator 100 Rand in cash. We manage that transaction. And in return, we hold the credit note, the ECT, on behalf of the customer worth 163 Rand. And then when the customer comes to pay their municipal bill, they will pay the 163 Rand, and then they will then settle with the municipality with the cash. If this customer was a prepaid customer, and I'm sorry, I haven't got the slide in this deck, but we basically then have the prepaid vending entity sitting between the municipality and the customer. They buy the ECT on behalf of the customer, and blend it into the cost of selling to the customer. So, for example, in this example, the customer would pay for the prepaid, would pay 100 kilowatt hours at 2 Rand 40, and 100 Rand for this additional 100 kilowatt hours. So they would actually pay to the prepaid vendor 340 Rand for the value worth 480 Rand. The balance is that ECT that the prepaid vendor then holds for them. And then when the prepaid vendor passes the cash to the municipality, they do the same thing here, passing the ECT plus the cash. So it does require the prepaid vendor to participate in the system to hold the ECTs on behalf of the customers. But in fact, it actually makes it easier because they already have all the integration into municipalities to pass the cash and the information. So actually implementing with a prepaid vendor is awesome because it makes it a little bit easier for us in terms of the integration. Plus, it unlocks those prepaid customers to be able to buy the power.
Fantastic. There's another question here from Alexandria asking if TES related all to the FBAE, which I believe is a free basic alternative energy policy. I hope I got that right, Alexandria.
So it isn't directly related, although it can participate in that. So the free basic electricity is normally enabled by the municipality in the setup, especially if it's prepaid free basic electricity, that the customers can get their free basic electricity allowance and get the voucher and load that onto their meter. Where ECTs could help is if they're using more than their free basic electricity, then they would be going onto the standard tariffs. Or maybe discounted tariffs, but still then if they're going into the area where they're having to pay for electricity, the ECTs could be blended into that to lower the cost. Yeah.
Okay, fantastic. And then can you just create some clarity? There was a question a few minutes back just on the CNI off-taker contracts are with the RPP, correct? Or via Meridian or the municipality. Can you just clarify that for all our listeners?
Yeah. So from a legal side, the municipality authorizes the token energy settlement, the TES system, to issue these credit notes on their behalf. And so there'll be metering of the generator at utility class metering that the municipality can check to make sure that the credit notes being issued correctly match the saving that they occur. So there's a contract between the municipality and the TES system to enable this side. Then the generator would also have a relationship with the TES system because the TES system is going to issue the ECTs to them against the metering data. And then we would also manage the contract relationship between the customer and the generator. So there would be, again, an arrangement between the customer and the generator. What I haven't elaborated on is that this could be a long-term contract to buy these tokens, but it could also be a marketplace that happens almost in real time, that customers could generate tokens and sell generators could generate these tokens and sell them to customers almost in a marketplace. Certainly, that's where we hope to get to, is that if we unlock demand for customers, if we make it possible for customers to access cheaper power, and all customers can access the cheaper power, every customer is going to want to do that. And so that would enable the supply on the generator side by creating liquidity of demand so that this would no longer need to be a long-term contract. These power plants could probably then get financed and built at risk because the demand is there, and then almost have a marketplace to sell these tokens in real time or off against short-term contracts. You might want to do a long-term contract to secure supply and to secure your hedge, but there could be a short-term marketplace emerging for this as well, and that then makes it much easier to build these generators. And crucial in all of that, again, just to reiterate, even though the customers are now accessing cheaper power, the municipality remains revenue neutral. They're still making all the margin that they meant to make, on the sale of all the energy. So they were still recovering their fixed charges. They were still recovering their use of system charges. Yeah.
Okay, fantastic. So, and just to clarify, the end goal is integration with banking apps and large, broader accessibility for payments and
100%. So the dream, if you like, it is exactly to make it really simple for all customers to access this. So wherever you buy your prepaid electricity, you could also access buying these savings from a parallel market. Absolutely. If banks are selling the electricity, it would be their interest to offer this, because maybe then you switch banks if one bank is buying on your behalf and another isn't. So I think it's certainly going to drive far more innovation than we can even comprehend at this stage. And perhaps not only for electricity, perhaps for water. Another thing it can help, which I haven't got into, is recovery of money for Eskom, the same way that this private power is captured as a credit note. Eskom could do the same thing, and the customer in some sense could pay Eskom directly, making it easier for municipalities to manage the cash that goes to Eskom. I obviously haven't got into all of that in terms of this introduction to tokenized energy settlement, but we see it as really scalable across multiple municipalities and Eskom, to enable from the bottom up. All this other wheeling that's happening is really big customers top down. We really want to architect something that enables something for all customers. Yeah.
Fantastic. There was another question from Lebohang. From a policy perspective, how are NERSA, Eskom, and the Department of Energy addressing the issue of wheeling and tokenized electricity systems?
So on the wheeling side, that obviously then you fall into all the regulatory requirements of wheeling policies, wheeling rules, new tariffs. That was that first slide that I put up, speaking to the complexity. And it's not necessarily bad. It's just what it is for wheeling, and it tends to then mean that it only really works for big projects on Eskom and in big municipalities. What we've tried to do is get out of that highly regulated, highly complex, highly difficult to implement world of wheeling and trading to a world where the municipality remains the distributor of all the energy. And that's what's crucially different in our architecture. We don't change the municipal role to sell all the electrons to the customer. But what we do is enable a way for the customer to pay for the saving that comes from a cheaper energy generator. And so that's what we've put in place, is this financial architecture that we call TES, that enables the customer to contract with the generator for the saving of the cheaper power. But that's a financial instrument. That's not an energy instrument. And so that's what makes it much easier, because we get out of the world of NERSA, out of the world of wheeling rules, out of the world of trading, and into the world of almost being a financial service provider.
Perfect. There's another question here from Clyde. Thank you very much, Clyde. He says, if the RPP connected to the municipal distribution grid had PV and BESS and could potentially reduce the municipal maximum demand, would there be an actual cost saving to the municipality? Would they have then to reduce their tariffs to reflect the saving? And can this methodology work with Eskom distribution to municipalities as previously mentioned above?
So there's a lot in Clyde's question, but to really answer it simply, yes, I've been talking about generators, but this generator could be a battery, reducing the peak demand of the municipality. And again, if you can prove that peak demand, maybe you can capture that as a saving that you pass on to a customer. or the battery could act buying from the municipality when electricity is cheap, and pushing that energy back into the municipality when electricity is expensive, creating an even bigger saving that customers can access. So there could be either a direct or indirect benefit to the municipality in terms of reduction in peak demand or maximum demand. So this actually could also be an unlock for municipalities that are maximum demand constrained. That was raised, I think, a little bit earlier, that there are municipalities that want to grow and cannot access more power from Eskom. This architecture, by building the power internally, means you reduce demand from Eskom, and especially if you use batteries, you can ensure that you keep your maximum demand down. But the risk is taken by customers, not by the municipalities, because the contracting and the value creation is between the generator or the battery and the customer.
Okay, fantastic. Are there any final questions for Frank? We do need to get our poll going. So Dan, if you can maybe get the poll up, and in the poll you can add your thoughts if you'd like to get more information on tokenized energy settlement, and would your municipality or organization be interested in a follow-up discussion on TES, which I highly recommend all the participants engage in. There's a lot of information that we weren't able to cover today, and hopefully we're going to be having a second or follow-up webinar on this, because it's a new development, and there's a lot of opportunity for municipalities in South Africa, like I said, to really leapfrog our energy market crisis. Although, as many of our speakers have identified, there are regulations and processes and policies that we need to get in place to really get ahead of our energy crisis and being leaders in the energy landscape. All right, so maybe we can also have some closing remarks from each of our speakers before we come to a close. Frank, would you mind starting off, and then actually maybe Frank, you can go at the end. Michael, Matthew, Johan, and then Frank, if you don't mind closing off for us.
Thanks, Lindy. From our perspective, I think just trying to link up different initiatives to see how the piece of the puzzle fits together for municipality, and that there's consistency between messaging between different organizations. So municipalities, it's clear what the options are, and then a real focus on how to move forward. I think there was some discussion in the chat around how to navigate Section 33 of the MFMA, and to try and get very specific about kind of regulatory roadmaps. If you're going this route, what would be required by who and by when? So yeah, those are some kind of takeaways for me and looking ahead. But thanks everyone for time and engagement.
I think from our side, it's you can see that there's for municipalities in particular, there's a lot of different focus areas on electricity, and there's a lot of support, I think, and a lot of different stakeholders, from National Treasury to DOEE to Operation Vulindlela to the work that, say, Meridian's doing on tokenized wheeling. There's a lot of focus to help municipalities take the next step forward to turn this into an opportunity. The multi-market, it is an opportunity, and I think if you are well capacitated and you invest into the opportunities, I think you would really benefit and strengthen your approach. And I think it works for all municipalities, and there are different options for different sizes and different states of financial status. So I think that this panel and the group of people that were on this panel really shared some really amazing insights on that. So look forward to keep watching and tracking the trends and the momentum here.
And then from my side, I think it's quite an exciting space that we're moving into, the energy transition. There's a lot of things happening, and the call to action for municipalities, I think, is to adjust with what the customer's needs are. To understand what their needs are and create an enabling environment for customers to take the risks that they want to take, to be able to purchase power from independent power producers. So there's a lot of innovations that's going around, and it is crucial to look at those and ensure that the municipality's bottom line is protected. From looking at the presentation and so forth, the Tokenised Energy Settlement does do that. So it's one of those innovations that can really catalyze the investment in private generation and support municipalities with growing the green economy within themselves. So thanks for the opportunity to allow me to present today, and looking forward to watching this space.
Yeah, and just in closing, also thanks to everyone who's been attending, and to the panelists. It's really been awesome to have you all. Appreciate that very much. And I just want to build in closing on what Johan said there. I mean, the reason we're doing this is I think we all want to see jobs created, economies grow, and electricity is fundamental to that. Access to affordable, clean power is only going to become more important in the world of climate change. And I think that's, everyone who's been presenting today is driven by that vision to see our economy grow, to see jobs created, and to see clean power. We don't want to end up back in load shedding again, and the massive harm that did to our economy. And that's part of the reason why we architected the solution, was really out of grappling with these problems and saying, how can we find ways to unlock cleaner power, cleaner, cheaper, green power for all people? And that's what's led to this innovation that, I really hope you found it interesting, and do look forward to further conversations with you, should you be interested in that. So thank you for your time today.
Thank you again to all our speakers and attendees. It was great having everyone, and a very big thank you again to Future Cities Africa and Meridian Economics for making this webinar possible. And look forward to seeing where TS goes in the future.